In this video, we're going to go over 4 super high growth ETFs you're going to want to take a look at right now. All 4 of these ETFs have been created by Ark Invests and managed by Cathie Wood. They are 4 disruptive innovation ETFs that are expected to outperform the market over the next few years, and these ETFs invest in companies that are going to change the way we live our daily lives. So disruptive innovation are companies that are changing the world. We have different ETFs that focus on various sectors of the market, but all the companies held within each fund are expected to develop new technology or innovations that will change the way we conduct our everyday lives. So these high growth ETFs have seen insane performance over the past 12 months. A lot of people are really getting into these newer funds. And in this video today, we're going to go over 4 of the top actively managed ETFs from Ark Invest that I believe will continue to outperform the market moving forward and give you a nice idea for some high growth stocks you may want to add to your portfolio. So as you know, everyone, I am the Gen Z investor, and every single day we talk about the stock market, go over different stocks you can buy and sell within your portfolio. And of course, we go over any big stock market news and headlines. And in this video today, we're going to focus on 4 Ark Invest high growth ETFs that have been trading on the market and have seen some beautiful growth. And they have growth that is expected to continue over the next few years. The first ETF we're going to take a look at today is ticker symbol ARKK. This is Ark's innovation ETF and is the most popular of the list we're going to go over in this video. Currently being traded at $102 a share, they are trading up 140% over the past 12 months. So this is ticker symbol ARKK, and this ETF currently has over $8.9 billion of assets under management. So this company primarily invests for long-term growth of capital by investing at least 65% of their assets in domestic and foreign companies that have one main theme of disruptive innovation. So these are companies that are expecting to change the way we live our lives, and this is of course managed by Cathie Wood. So she has been taking the investment world by storm with these very bullish perspective on these innovative companies. Her fund, ARKK, has been living up to the hype. Over the past 1 year, over 115% growth, and averaged over the past 5 years of around 39.2% annual share price growth, which is absolutely incredible. And since the fund was created at inception, it's been averaging 31% annual growth. Impressive numbers compared to a company like the S&P, which that ETF has returned between 8 to 10% averaged over the past 50 plus years. So of course, this ETF has been around for a shorter period of time, and we're living through a kind of a transition through the economy right now to these forms of technology, which is of why we've seen this such a large boost in this ETF. But if they can continue this performance, I believe it will gain a lot of market share and more investors will be willing to take the risk and invest into this type of ETF. So some of the top holdings are Tesla, Invitae, Square, Crisp, Roku. Those are kind of the top 5 holdings within the ETF. Tesla making up the largest at around 10%. If we take a look at the fund's fact sheet, why people and why investors should take a look at Ark is because these 5 key points. They have some nice exposure to innovation. All their funds are based on the one main key idea of disruptive innovation. There's a lot of high growth potential, which we're going to see from all of these ETFs. They are nicely diversified. Each fund holds at least like around 30 to 50 stocks within each ETF. They are grounded in research, so these are not randomly picked companies. A lot of research and analysis goes into which stocks are going to make it into these funds, and they are considered cost effective. They still have a higher expense ratio at 0.75 compared to a more passive index-based ETF, which are somewhat even free or have a below 0.1% expense ratio. But so you're getting an actively managed fund with Ark Invest, so you have to pay that higher fee of 0.75%. So if we take a look at ARKK, what's actually being held within this portfolio is a nice little variety of elements. So 10% of the fund is within cloud computing, e-commerce makes up around another 10%, molecular diagnostics, gene therapy, big data and machine learning, digital media, and of course there's a bunch of other elements within this overall ETF. So you're getting into a fund that of course is focused on disruptive innovation, but is still well diversified within the field. They have nice diversification between sectors as well. 35% of the fund is within healthcare, 28% between information technology, communication coming in at 16%, and consumer discretionary at 11%. So this is probably the most popular ARK Invest fund, ticker symbol ARKK, and it is up over 140% in the past year. The second fund is ticker symbol ARKW, which is ARK's next generation internet ETF, which is up close to 137% in the past 12 months as well. So this is another fund that is invested into companies like artificial intelligence, so AI, big data, cloud computing, cybersecurity, and blockchain. Those are kind of the focus and the future of the overall internet moving forward, and those are the companies held within ticker symbol ARKW. So the same fee at 0.76%, typical of 35 to 50 holdings within this portfolio, and they have assets at around 2.4 billion. So overall, this ETF is focused on the next generation of internet companies, so where the internet is headed in the next 5+ years. And of course, the growth of cloud computing, e-commerce, big data, we're only at entry-level points within those types of platforms and industries, and there's a lot of growth potential moving forward, and those are the companies held within ARKW. So if we take a look at the performance, up over 123% from the latest report on the website, and averaging 43% annual growth over the past 5 years, and since inception, up 36% annually, which is absolutely incredible. So the top 10 holdings are still represented by Tesla coming in at number 1 at around 10% of the fund, Roku at 6.66%, Square at 6.27%, then Facebook and Slack round out the top 5. If we take a look at the fact sheet, similar type of ETF where they're expecting this overall industry to expand at a rapid rate. Based on their research, they have created 1 trillion in market capitalization, and ARK believes it will add 30 trillion over the next 17 years. So they believe they're going to go 30x in 17 years, which is absolutely incredible. Very, very high growth rate, and if they can actually hit these targets, the overall funds and the companies within these funds are going to grow at insane rates. So the elements within this ETF are made up of cloud computing, e-commerce, big data, digital media, and Internet of Things in the top 5 elements. And overall, of course, by the nature of this ETF from next generation internet, you're of course going to see a majority of information technology companies and communication services. The third ETF in this high growth ARK Invest portfolio is ticker symbol ARKF, which is the Financial Tech Innovation ETF. $42 a share, up over 95% in the past 12 months. 52-week low at around $17 a share, and 52-week high at over $43. So this is an ETF that gives you exposure to financial tech innovations, including the future of payment solutions, such as mobile payments, digital wallets, peer-to-peer lending, and blockchain. So this fund, of course, Invest is an ETF that seeks, of course, long-term capital growth through investing its company in the financial tech sector. So these are the companies where, as the internet expands, financials and tech, the combination of those two moving forward is only going to grow. And things like transaction innovations, how people spend money, how people retain money, blockchain, risk transformation, all of these different aspects within the fintech world that are growing at annual rates in the double digits or triple digits each and every year are held within this type of fund. So this fund, same fee at 0.75%, only has 674 million of assets under management, so it is a smaller fund. They have seen nice performance overall. Since inception, they're up over 51% per year, and over the past year, they're up over 86%. Top holdings include Square, Mercado Libre, ticker symbol MELI, which is the Amazon for Latin America, one of the largest e-commerce platforms down south. Intercontinental, Pinterest, and LendingTree make up the top 10. This fund, if we take a look at the fact sheet, similar, they believe the US digital wallets could be valued at $800 billion by 2024, which means in a matter of 4 years, they're going to over 27x the current market value for digital wallets, which represents just shy of $30 billion today. And this fund is, of course, made up of transaction innovations, frictionless funding platforms, customer-facing platforms, and blockchain, and a few other elements. And this is another high-growth ETF that is expected to see rapid growth over the next few years. And you can see, as of late, a rapid surge in share price. The fourth and final ETF from Ark Invest that we're going to take a look at for some high growth is the Ark Invest, ticker symbol ARKQ. This is the Autonomous Technology and Robotics ETF. So this is currently being traded at $62 a share, up over 93% this year. And this ETF is exposure to companies in the energy storage, autonomous vehicles, robotics, automation, 3D printing, and space exploration. So this is another disruptive innovation ETF from companies that are trying to grow in industries of the market that really haven't been expanded to just yet. Autonomous vehicles aren't mainstream yet. Space exploration isn't mainstream yet. 3D printing, of course, is being used, but it's not within everyone's households just yet. So these are companies that operate in sectors that are trying to become a daily part of humans' lives. So currently have around 633 million of assets under management, 0.75% expense ratio, and similar, Catherine Wood is a portfolio manager for all of these funds. So they have annual performance of around 28% per year over the past 5 years. Since inception, they have averaged over 20% per year. And of course, not surprising, in the top 10 holdings, we have Tesla coming in at number 1, Materialize at number 2, 2U rounding out the top 3. So this is another ETF to take a look at for autonomous technology and robotics. And again, this is another industry that is expected to grow. It is currently worth more than $1 trillion today. They believe in the next 4 years, it's going to be worth a value of around $5 trillion and up to $9 trillion to round out 2029. So a huge industry with massive growth potential. And of course, this ETF is focused on autonomous vehicles, robotics, and 3D printing. So those were 4 high growth ETFs, all from Ark Invest. They invest in various sectors of the market. They have similar expense ratios that are kind of on the high side, but compared to some other actively managed funds that actually underperform the overall market, the fee shouldn't be too much to worry about. If you're looking for some disruptive innovation, if you're looking to invest in some growth stocks that may have some higher risk, but potential for higher reward, these are some funds you're going to want to take a look at. Ark Invest has been growing in popularity, their funds have been taking over the market, and we will see if they can continue to outperform and provide investors with some nice total returns. So thank you for tuning in. I am the Gen Z Investor, and see you in tomorrow's video.